to the chart you've all been waiting for, the Facebook shares, and guess what? They're still nowhere near $38 a share. They're at 32. They were actually close to 31 earlier today. Doesn't look like they're going to get back to issue price, $38 anytime soon. What does this mean for Wall Street? What does it mean for all those financial advisors who are telling or putting their clients into this stock? Daisy Maxey of Dow Jones Newswires is here. Daisy, defend Facebook.
I'm not going to defend Facebook.
You're not going to defend. Well, then just please.
That's a tough job.
Okay, I'm not asking you to defend Facebook. But I do want you to talk a little bit about the financial advisors out there. You know, financial advisors are supposed to serve all those retail investors. They were getting all those phone calls. Oh, my sister-in-law, she says I need to own those shares. She uses Facebook all day.
There were dreams of becoming bazillionaires.
Yeah, dreams of riches. Did anybody
did
the financial advisors say, wait a second? You know what?
They did.
They did say, wait a second.
They did.
Just wait a second. In order for you to really make any money, this thing now has to be worth as much as Google or Apple or something.
Well, they made a few cents if they turned them on the first day, okay? But, you know, the advisors did a good job from what I hear.
You think the advisors did a good job?
They told them not to get involved. They had these frenzied clients coming to them. Please, please, talking to my neighbors, talking to my friends. I need to get in this hot IPO. The advisors, by and large, no, don't do it. It's overvalued.
And yet, 25% of this offering, so around $4 billion of the $16 billion that was issued, was apparently placed with retail investors. Do we know who that stock was placed with? Are we talking about like the brokers at Morgan Stanley or Merrill Lynch?
Well, there are people who told me they were going to their TD Ameritrade account, their Schwab account.
I mean, TD Ameritrade, 45,000, buy orders at the open.
The advisors were fighting with them. They said, look, if you have to do this, and as one advisor said to me, in the end, it's the client's money. If they're dying to do it, take some fun money, throw it in there. Don't just put a lot of money in. And many advisors talked about. One of them I talked to said he sat on Friday watching the close with someone he had talked out of putting a large amount of money into these shares, and the guy bought him a beer.
Right.
So he was thrilled.
To what extent do we know that the financial advisors basically didn't just say don't buy the Facebook IPO, but you know what? You shouldn't be buying any IPOs. You know, because the reality is a lot of financial advisors, it's not necessarily in the financial advisor's interest to put their hands on their shoulder and say, Daisy, listen, you got some money, put it in a Vanguard index fund. You know what? If you're really interested in stocks, put it in a Vanguard technology.
Well, that said, a lot of
why don't they do that? They don't do that, do they?
They don't want to play in this field, this arena. They'll steer them to ETFs, they'll steer them to mutual funds, sometimes individual stocks. Some of these advisors don't even want to go to individual stocks, but IPOs they don't really want to play with. And that's not something most of the advisors are advising that I talk to. And many of them said, look, if you have to do it, take a little bit of fun money. Others said don't go near it, and they really researched the valuations, and they talked clients down. And in many cases, they didn't hear back from those clients.
Generally speaking, it's generally viewed on Wall Street as a good thing to get allocated shares in IPOs, especially if you're a retail investor. For most successful offerings, I had worked on Wall Street for many years, it is generally viewed as tough to get for retail investors.
These were tough to get.
These were tough to get. Well, they weren't that tough. I mean, if they were really tough to get. But let's go to some of the data. You have some data on other IPOs here, right?
Of 2,393 tech IPOs.
How many?
Between 2,393
I can't even imagine there have been that many.
From 1980 to 2011.
So that's all tech IPOs that have ever happened.
Only 800, I'm told, only 804 of those were positive if you bought them and held them for a 3-year period.
Right.
All the rest were either neutral, and more than 1,500 of those you would lose money.
Right, and
that,
by the way,
and that's including dividends and capital.
Right, so basically 1 out of every 3 or 4 you got taken to the
It's not a good deal, and that's why advisors are loving this, because many of them talk people out of it, and they said it shows investors finally. Well, there are many that have showed, but this one shows that you can't even trust the experts. I talked to Jay Ritter, who's a professor.
Who's an expert.
Yes, he's an
expert.
So
why should I trust him?
Professor at
why
the
should I trust him?
University of Florida.
You just told me I shouldn't trust the experts.
He said he looked at the valuations, told people no, don't do it. He was working with advisors who wanted to talk their clients down, said don't buy it. But the funny thing, he predicted that it would close the first day at 49, and he was allocated shares through his Schwab account and bought 400 shares on his own, and he's holding.
So yeah, he's holding, and he'll lose money. Thank you very much, Daisy Maxey.